Hello students, I am Lalita as Humraskar, economics teacher, BYK College of Commerce welcomes you in online expert lecture series organized by BYK College of Commerce for class 12. Today I am going to discuss with you important concepts related to your syllabus. And today I am going to cover last three chapters, chapter number 8, Public Finance in India, chapter number 9, Money Market and Capital Market in India, and chapter number 10, Foreign Trade of India. Now let us see chapter number 8, Public Finance in India. Let us see some basic information related to public finance. Public finance is one of the old branches of economics which highlights the role and functions of the government in an economy. There are two important branches of economics, microeconomics and macroeconomics. So public finance comes under macroeconomics, and that is one of the old branches of economics which indicates roles and functions of the government in an economy. Government is a formal or informal institution created by the people in a specific region to perform various functions. So who elect government? Government is elected by the people for the people through election. Okay, so government is a formal or informal institution created by the people in a specific region to perform various functions. And let us see these functions. What are these functions? Protection from external attacks, protection of private property of the people, generation of employment, maintaining internal law and order, provision of social needs like education, health, etc. Okay, so these are the functions performed by the government. Now let us see the classification of the government functions. Government functions are classified into two categories. Number one, obligatory functions, and number two, optional functions. Now let us see what are obligatory functions. Protection from external attacks, maintaining internal law and order, etc. These are obligatory functions. Now let us see what are optional functions. Provision of education, health services, provision of social security like pensions and other welfare measures for the people. So these are the optional functions. Now let us see what is public finance. What is definition of public finance? Let us see. Public finance is one of those subjects which are on the borderline between economics and politics. So it is that branch which is on the borderline between economics and politics, because government is very important institution to perform various functions in public finance. So it is concerned with the income and expenditure of public authorities and with the adjustment of one with the other. Okay, so this is definition of public finance given by Hugh Dalton. Now let us see the next definition. Public finance is the study of the principles underlying the spending and raising of funds by the public authorities. So such kind of definition of public finance is given by Professor Findlay Shriras. Now let us see the structure of public finance at a glance. Public finance in India is divided into five. Number one, public expenditure. Number two, public revenue. Number three, public debt. Number four, fiscal policy. And number five, financial administration. Now let us see what is public expenditure. Public expenditure is that expenditure which is incurred by the public authority. Public authority means here central, state and local bodies for the protection of their citizens, for satisfying their collective needs and for promoting their economic and social welfare. So that is public expenditure. Public expenditure is divided into four types: revenue expenditure, capital expenditure, developmental expenditure and non-developmental expenditure. Second type of public finance is public revenue. That is an important component of public finance. Okay, that is public revenue. Now what is public revenue? Public revenue means the aggregate collection of income with the government through various sources. Public revenue holds the permanent position in the study of public finance, which is the part of the study of economics. Thus, necessity of public revenue arises due to public expenditure. right? Now public expenditure is classified into two: tax and non-tax revenue. Taxes are divided into two: direct taxes and indirect taxes. There are three types of direct taxes: proportionate taxation, number two progressive taxation, and number three regressive taxation. And indirect taxes, that is only one component of indirect tax. Only one tax is there in India, that is goods and services tax, that is GST. Okay, as far as non-tax revenues are concerned, let us see the sources. Number one is fees, number two prices of public good and service, number three special assessment, number four fines and penalties, number five gifts, grants and donations, number six special levy, and number seven borrowings. Now let us see what is public debt. Public debt is divided into two: public, that is internal public debt, and external public debt. Okay, let us see what is public debt. Raising debt is the most common activity of any government because government expenditure generally exceeds government revenue. Public debt policy of the government plays an important role in public finance. There are two types of public debt: internal and external. What is internal debt? When government borrows from its citizens, banks, central bank, financial institution, business houses, etc. within the country, that is known as an internal debt. Now what is external debt? When government borrows from foreign governments, foreign banks or institutions, international organization like International Monetary Fund, World Bank, etc. It is known as external debt. Okay, now let us see the next fourth component of public finance, that is fiscal policy. Fiscal policy means by which a government adjusts its spending levels and tax rates to monitor and influence a nation's economy. So it deals with the public expenditure, public revenue, and public debt. In short, it is a financial policy implemented by the government. Now last component of public finance, that is a financial administration. Okay, financial administration, there is a one type: revenue, expenditure, and debit policy for overall growth. Okay, so financial administration means a smooth and efficient implementation of revenue, expenditure, and debt policy of the government is known as a financial administration. This includes preparation and implementation of the government budgets along with the overall growth of the country. So these are the five important components of the public finance: public expenditure, public revenue, public debt, fiscal policy, and financial administration. Now let us see what kind of question is possible related to public finance. Here I selected one question, that is, state with reasons whether you agree or disagree with the following statements. Okay, this is question number 4 in your theory paper. And here statement is given: obligatory functions is the only function of the government. Okay, so what is your answer? You agree or disagree? No, I do not agree with the above statement. Okay, so separate 1 mark for writing yes, I do agree with the above statement, or no, I do not agree with the above statement. So your answer is no, I do not agree with the above statement. Immediately you will get here 1 mark, and 3 marks for writing reasons. Now what should be first reason? You have to define what is public finance. Public finance is one of the old branches of economics which highlights the role and functions of the government in an economy. So government is a formal or informal institution created by the people in a specific region to perform various functions. Next reason is these functions can be classified into two categories: obligatory functions and optional functions. And they are as follows. Let us see obligatory functions: protection from external attacks, maintaining internal law and order, etc. And what are optional functions? Provision of education and health services, provision of social security like pensions and other welfare measures, etc. These are optional functions. Now let us see the second statement. Fine and penalties are a major source of revenue for the government. So what is your answer here? No, I do not agree with the above statement. Okay, fine and penalty are a major source of revenue for a government. Public revenue means the aggregate collection of income with the government through various sources. Public revenue holds the permanent position in the study of public finance, which is a part of study of economics. The government imposes fine and penalties on those who violates the laws of the country. The objective of the imposition of fines and penalties is not to earn income but to discourage the citizens from the violating the laws framed by the government. For example, fines for violating traffic rules. However, the income from this source is a small. Government gets revenue from two sources, taxes and non-tax revenue. Tax revenue is a compulsory contribution from the people to the government without getting any special benefits to taxpayers. So tax revenue is the major source of revenue for the government, that is in the form of direct taxes and indirect taxes. So direct taxes in the form of income tax and wealth tax, and indirect taxes in the form of GST. So fine and penalties are not a major source of revenue for the government. Now let us see the next statement related to do you agree and disagree, give reason. The goods and services tax has replaced almost all indirect taxes in India. Yes, I do agree with the above statement. Yes, immediately here you get 1 mark. Now let us see what are reasons. What reasons should come in your answer? Number 1, GST came into effect in India on July 1, 2017. It was proposed by the Kerkar Task Force on implementation of the Fiscal Responsibility and Budget Management, that is FRBM Act, in July 2004. So GST is an indirect tax used in India on the supply of goods and services. What should be second reason? GST simplified the tax system in a country. GST is different from an excise or sale tax imposed as a single stage levy on the manufacture or sale of product. So it is comprehensive tax base with a nationwide coverage of goods and services. Third reason is GST would replace the following taxes levied and collected by the center and state, such as central excise duty, service tax, additional duties of customs, state value added tax, entry tax, entertainment tax, etc. There are three types of GST: CGST, SGST and IGST. CGST stands for Central Goods Services Tax, which is imposed on the interstate supplies of both goods and services by central government. SGST stands for State Goods and Services Tax, which is received by the state. And IGST stands for Integrated Goods and Services Tax, which is imposed on all interstate supplies of goods and services. Now let us see chapter number 9, that is money market and capital market in India. Let us see the Indian financial system. As far as Indian financial system is concerned, there are four components of Indian financial system: financial institutions, financial market, financial instruments and financial services. Let us see what you understand by financial institutions. Central banks, retail and commercial banks, interest bank, credit unions, savings and loans associations, investment banks, investment companies, brokerage firms, insurance companies and mortgage companies. These are the examples of financial institution. Now let us see the second component of Indian financial system, that is financial market. There are two financial market in India: money market and capital market. What is money market? Money market is a market for lending and borrowing short term funds. And what is capital market? Capital market is a market for long term funds, both equity and debt, raised within and outside the country. Okay, third component is financial instruments. Okay, there are many financial instruments found in money market and capital market. Let us see what are the capital market instrument: bonds, equity, shares, derivatives, government securities, trade bills, promissory notes. These are capital market instrument. And what are money market instrument? Call or notice money market, treasury bills, commercial papers, certificate of deposits, commercial bills. These are money market instrument. Now what are financial services? These are economic services provided by the finance industry, which consist a broad range of businesses that manage money. It includes credit unions, banks, credit card companies, insurance companies, accountancy companies, consumer finance companies, stock brokerage, investment funds, individual managers, and some government sponsor enterprises. Okay, so these are the financial services. In your syllabus you have to study only financial market. Okay, financial market, that is in the form of money market and capital market. As far as financial market is concerned, there are two types of financial market in India: money market and capital market. Let us see the structure of money market. Money market in India is a dichotomous by nature. It means there are two branches of money market: organized sector of money market and unorganized sector of the money market. Okay, organized sector of money market is divided into Reserve Bank of India, commercial banks, cooperative banks, development financial institutions, discount and finance house of India. And as far as unorganized sector is concerned, there are three components of unorganized sector: indigenous bankers, money lenders, and unregulated non-bank financial intermediaries. Now let us see the structure of Indian capital market. There are four components of Indian capital market. Number one is government securities. Number two, industrial securities market. Number three, development financial institution. And number four, financial intermediaries. First one is a government securities market, that is also known as giltage market. Giltage market is the market for government securities or securities guaranteed by the government, including treasury bills and bonds. Now second component of Indian capital market, that is industrial securities market. It is divided into two: new issues market and old issues market. New issues market is also known as primary market, and old issues market is also known as secondary market. Right? Now third component of Indian capital market is development financial institution. It is divided into IFCI, ICICI, SFCs, IDBI, IIBI, and UTI. Okay, what do you understand by development financial institution? Yes, development financial, what is the prime objective of development financial institution? Economic development of the country. These banks provide financial as well as technical support to various sectors. They do not accept demand deposits from the public. They raise funds by issuing their bonds to the general public. They also provide and guarantees to banks on behalf of the companies and subscription to shares, debentures, etc. Okay, and these are the different types of development financial institution: IFCI, ICICI, SFCs, IDBI, IIBI, UTI. Now let us see financial intermediary, that is also important component of Indian capital market, and they are divided into merchant banks, mutual fund, leasing companies, venture capital companies, and others. What do you understand by financial intermediaries? Financial intermediaries are any institution that moves money between savers and borrowers, or it is an organization which act as a link between the investor and the borrower to meet financial objectives of both parties. Okay, so they consist of merchant banks, mutual fund, leasing companies, venture capital companies, etc. So this is all about the structure of Indian capital market. Now let us see what kind of question is possible. Here I selected one question that is answer in detail, that is a essay type question. Let us see, here question is given: what is money market, and explain structure of money market in India. Okay, so what point should come in your answer? Number one is introduction of money market. Number 2, definition of money market. And number 3, explanation of organized and unorganized sector of money market in detail. Let us see next essay type question for 8 marks question. What is commercial bank, and explain functions of commercial bank. So what point should come in your answer? Number 1, introduction. Number 2, definitions of commercial bank. And number 3, explanation of all functions of commercial banks in detail. Next essay type question is explain functions of RBI. RBI means Reserve Bank of India, that is the central bank of the country. Okay, let us see. First point should be here introduction point. You have to write basic information related to RBI. Number 2, you have to write definitions of central bank given in your textbook. And number 3, explanation of all functions performed by RBI in detail. Now let us see last chapter, that is chapter number 10, foreign trade of India. Let us see basic concept in this chapter. First one is the meaning of internal trade. What is internal trade? Buying and selling of goods and services within the boundaries of a nation are referred to as an internal trade. So internal trade is also known as home trade or domestic trade. Now let us see what is foreign trade. What is the meaning of foreign trade? Foreign trade is a trade between different countries of the world. Okay, so it is called as an international trade. Now let us see the types of foreign trade. There are 3 types of foreign trade: import trade, export trade, and number 3 is the entry port trade. Let us see what is import trade. Import trade refers to the purchase of goods and services by one country from another country, or inflow of goods and services from foreign country to home country. That is known as a import trade. The second type is export trade. What is export trade? Export trade refers to the sale of goods by one country to another country, or outflow of goods from one country to foreign country. That is known as a export trade. Number 3 is a entry port trade. Entry port trade refers to the purchase of goods and services from one country and then selling them to another country after some processing operations. Okay, that is known as a entry port trade. So these are the 3 types of foreign trade. Now let us see the next concept in foreign trade. Direction of India's foreign trade. What is that? Let us see. Direction of foreign trade means the countries to which India exports its goods and services, and the countries from which it imports the goods and services. This is known as a direction of India's foreign trade. Now let us see the important concept here, balance of payments. What do you understand by balance of payments? The balance of payments of a country is a systematic record of all international economic transactions of that country during a given period, usually a year. That is known as a balance of payment. Let us see some definition given by the economist about balance of payment. Balance of payments is a summary statement of all the transactions between the residents of one country and the rest of the world. Okay, this is known as a balance of payment as per Ellsworth. Ellsworth is the name of the economist. Let us see the second definition. This definition given by Walter Krauss. According to him, the balance of payments of a country is a systematic record of all economic transactions completed between its residents and the rest of the world during a given period of time, usually a concept of a year. Now let us see the next important concept, balance of trade. Balance of trade is the difference between the value of countries' exports and imports for a given period. Balance of trade is also referred to as the international trade balance. Let us see the definition of balance of trade given by Bentham. Let us see what it says about balance of trade. Balance of trade of a country is the relation over a period between the values of her exports and imports of physical goods. Let us see the next definition given by the Samuelson. If export value is greater than the import value, it is called as a trade surplus, and if import value is greater than an export value, then it is called as a trade deficit. Now let us see what kind of question is possible related to this chapter. Here I selected this question, identify and explain the concept from the given illustration. And here illustration is given, India purchased petroleum from Iran. Okay, first you have to identify the concept and after that you have to explain it. So 1 mark for identify the concept and 1 mark for explaining the concept. Okay, and here concept is import trade. And after that you have to define what is import trade. Import trade means purchase of goods and services by one country from another country. Now let us see the second illustration. Maharashtra purchase wheat from Punjab. What is the concept here? This is known as an internal or home or domestic trade. And you have to explain what is internal trade. It is a buying and selling of goods and services within boundaries of a nation. Let us see the third illustration. England imported cotton from India, made ready-made garments from it and sold them to Malaysia. What is the concept here? Entry port trade. Okay, so it means purchase of goods and services from one country and selling the same to another country. Let us see the essay type question here. This is 8 marks question. What kind of question is possible related to this chapter? What is foreign trade? And explain the role of foreign trade. How to write down the answer? Number 1, meaning of foreign trade with the help of definition that you have to explain. But before writing meaning of foreign trade with the help of definition, you have to write the introduction about the foreign trade. Okay, after that you have to write meaning of foreign trade with the help of definition, and number 2, explanation of role of foreign trade that you have to explain in detail. Let us see students some important instruction while solving your theory paper. Number 1 is read textbook carefully. Number 2, solve more and more text-based questions. Number 3, practice all types of questions asked in the board paper format. Revision of all chapters is must. Number 5, ask your doubts to the teachers. And number 6, do not keep any chapter or topic as an option because all chapters are equally important. So these are important instruction while solving your paper. And finally student, all the best to you for your exam. I given some video links related to chapter number 9, that is money market and capital market in India, which covered the whole chapter. And finally, thank you for listening my video lecture.